it's Chris here from Serene Education with the 4 major zones update for the 9th of May 2013. Morning, guys. Going to be going over the 4 majors this morning, starting with the euro against US dollar and using our FX8 ultimate template. Okay, let's have a look at the daily. So what's been happening? What happened yesterday for euro? Great day for euro yesterday. We were able to see a lot of momentum to the upside, really pushing off as I thought it would do from off the lows here. As long as it maintained above the 38.2, we would likely to see further upside movement, and sure enough, we saw that yesterday. A nice bull candle to the upside and clearing the 38.2 above us. So getting above this consolidation area here. Now it needs to remain above here. We've been above this level on 2 prior occasions. On both occasions, we failed to see euro actually finding or stamping its ground here, or forging out a support here in order to move higher. So it's important that we do get to see that today. So intraday, guys, use this 38.2 here at 13,139 as your intraday support. As long as price remains above this, there's more likelihood for price to continue building on that. If she gets below this again quite soon into the European session this morning, then there's not a lot of true sentiment behind this upside move. So it's imperative that we are above all the moving averages. We are swinging higher, which is fantastic. RMO is above the zero. MACD is just above the zero. You can see it's consolidative. If you look at what price has done just recently, the 2 highs, pretty much making higher highs. However, MACD is clearly fallen short. But as long as it maintains above the zero, that's important. It's imperative that 38.2 remains below price for the foreseeable future, so that we can actually build on that. If we fail to see any building happening above this 38.2 mark here, which is the 13,139, then there's unlikely to see any further upside movement towards these current highs and towards that most important fib retracement here in the shape of the 50% retracement on our weekly time frames, which is the 1348 mark. So imperative through today, and particularly the remainder of this week, price needs to remain above the 13,139 mark. If it fails to, then there's more likelihood for price to be pushed, and we have seen failures here in the past, guys. It's so important. We do need to see price actually getting above this level, because in the past we've actually seen a true failure here. So very, very important. Today, very, very important news as well is the majority of Europe is away on a bank holiday. We don't have the Swiss with us this morning. We don't have Germany, and we don't have the French. So the only ones that we have is pretty much the Brits, and there's a lot of news out today. We have interest rates announcements, the official bank interest rates announcements. We also have asset purchasing facilities figures, the MPC rate statement. So there's quite a lot of news for the sterling market cable. And then we have a bit of news this afternoon for the US in terms of the unemployment claims figure, which is the most important one. They're expecting a higher figure than the previous one. If that is the case, then we are definitely going to see some movement this afternoon. So very, very important for euro this morning to remain, and for the remainder of today, to remain above this 38.2 mark. So on our 4-hour chart, you can see pretty much that the RMO across the board, barring our 5 minutes, the RMO is below price, supporting price, which is good. And our moving average is also pretty much below price on most of the time frames, bar the weekly, supporting price to the upside, which is also positive. However, intraday, you can see there's a bit of hesitation here, a lot of red, and R squared is not complementing this upside movement intraday. And that's primarily because we're consolidating. You quite clearly see over the past 20 hours or so, price is consolidated. It needs to remain above here. Okay, guys, this 38.2 is a very, very a valid area where price needs to consolidate. You can see it before. We've been above here before. We saw consolidation, but when it came to actually building candles to the upside, it just failed to materialize. None of that sentiment paid through, and what we saw was price reverting to the downside. So here, very, very important. Okay, RMO is still above the zero. MACD is slightly consolidative, but nonetheless, it's still above the zero line, which is important. Okay, so what we want to see here is MACD going bright green again, the RMO making a higher high here, and that will tell us the sentiment is coming through. Make sure that your R squared and your intraday is confirming that sentiment to the upside is positive, and then we could look to these prior highs and then ultimately up towards that 50% mark to the upside as our next target. Hourly chart, consolidation, as you quite clearly see, a lot of blue and red arrows. However, the candles remain blue. All our moving averages are still below price. The RMO has dipped slightly, but that's only because price has also dipped slightly. MACD is also below the zero because we've consolidated. Okay, so we are in a consolidative range. what we want to see is now is a nice hourly candle close higher than the consolidated range here. That would give us a clear indication that upside is important, and then we can look to the upside for the foreseeable future. If she falls lower than 38.2, then we should be looking back towards this trend line, back towards the moving averages, back towards this area here, and ultimately that 38.2 below us would be back a potential target for the near-term future. Onto sterling, let's have a look at this one. You can see I've drawn my Fib retracement from the all-time higher back in December, late December, to early April, March of this year in particular. And you can see this dark red line over here, this major line, is my monthly Fib retracement area. So you can see we're trading above it, which is an important point, because below that price was actually using as a support for many years. However, we saw a break below, heading towards that 1485 mark, and then bouncing, and then subsequently be thought, well, if this was a breakout, we would see the pullback and then the continuation here, failure, and continuation lower. That failed to materialize, and we saw this major move to the upside here, cancelling all this negativity around here, and now we're trading higher. But what's happened now is it slams straight into the 50% retracement from the week, from our daily high here in January to the low here that we saw in February, March. And you can see quite clearly for the last week or so, she's failed to actually breach that. Okay, and she's just going sideways. Now, remember, the RMO plots nice trend, and you can quite clearly see RMO was up until recently spending more time below the zero line, and now recently we're spending above the zero line, which is a good sign. Fantastic. As long as she continues to do so, then we should be looking for buying sentiment. Intraday, you can see a lot of blue. However, our R squared is not complementing that upside movement, primarily because price is just not able to break above this 50% retracement level here. This clear resistance, and the R squared is telling us that sentiment, even though it's buying intraday, is not genuinely there, because people are well aware of the major resistance that we're seeing on our daily across this last week. So it's imperative for sterling to still remain positive. We need to get above it. Okay, and we could see a bit of news out today that could reflect price today on sterling. That's going to be the interest rates announcements. The previous figure, it has been 0.5% for a number of years. They're forecasting no change. But remember, last week, Europe did actually drop the interest rates by 0.25%, but they did forecast there was going to be a change. So, I don't know. Once you watch, is sterling going to do the same thing as counterparts have done and drop the interest rates? They've been asked to for many years, and they've failed to do so. But in doing so, they've actually helped stimulate the market slightly. But an interest rates drop wouldn't be the worst thing in the world, especially now. You know, we weren't too long ago thinking about a triple dip recession, so it could be, the news could factor into that. So just be well aware of it, something to watch, because if the news is negative and it drags price down, then we clearly know that this is going to be a major resistance level near term, and so therefore we should be looking for the first target here to the 38.2, where price was came on stock just recently, in the shape of the 153900 mark. So, and then below that we have the major one, which is this area here at the 15314, just above the 15300 mark, which is the major support and resistance Fib retracement from the monthly. But as long as it maintains above this area here, this major red line, and you can see it's still swinging higher, the trend line you can quite clearly see swing high. So if it consolidates in this area here, it's not really a problem, because it's still looking positive, because we're still above, we're still making higher highs, which is the most important thing. Okay, so ideally, if this is to remain positive long term, we need to get above this 50% retracement area here in the shape of the 155575 mark as soon as possible. So our 4 hour, you can see that consolidation, a lot of attempts at trying to get above the 50% line, however, not finding the actual sentiment to complement that scenario, and price, however, still wanting to make attempts. Okay, so it's attempted, pulled back, attempted, pulled back, and the pullbacks haven't been that great, so it's really moved well away from price, which is a clear sign that price still wants to make a reattempt to these highs. And if you drew a fib from the start of this upside trend recently on our 4 hour time frame, you can see that the 23.6 and the 38 have been the two pullbacks of choice here, primarily because the sentiment still wants to go higher. So important. If it fails to go higher soon, then ultimately it's just going to let go, and then you can clearly think that intraday we're going to look at 1545 as our first target, a break of this one over here, and that's a nice little target here of just over 50 pips, and below that there's a second target back towards the major 38.2, which is another 50 pips away. Get below that, then there's the all important ones to the downside, back to the 42 pip range, which is the trend line support, and then back to the institution, which is another 75. So there are genuine target areas to the downside, but remember, because we're in a bull trend, price is still wanting to go higher, we're always got to be aware of that. So the only thing that's really going to reflect that price today is potentially that official bank rates statement later this afternoon. Onto the US dollar Swiss franc. Here again, let's see what's happening here on the very mixed signals. Very, very mixed. You can quite clearly see smattering of blue, but predominantly red. The most important ones being our RMO and our institution down here. You can see bar the daily, which is where price is trading right now in real time, just above the institution moving average. Every other institution moving average on every other time frame is looking negative. So that's above price, which is not good. RMO as well is doing exactly the same thing. Quite clearly see that we're seeing lower highs recently on the daily, which is not a clear sign of upside movement. And it's not making higher highs, then there's always going to be lower lows. Recently, we've seen a consolidation here, very indifferent. We saw a tweezer bottom right here. Price has been at this level before and then bounced higher. So, but we're consolidating in the squeeze pattern. RMI has dropped, but that's also complementing what price is doing recently, which is a good sign, because as price, especially through here, you can see price actually did a double attempt, reattempt on 3 occasions, but the RMO was clearly telling us that Sempton wasn't in that move, and subsequently price has dropped since then. So we're looking like potentially prices starting to look more negative. However, we need to get below not only the institution but also the 23.6 February retracement area to confirm this is genuine negativity. Okay, we don't want to be part of the speculation. There's far too much support below price as we speak, and rather let price get below all this if it's genuine negativity, and then we can come back and then look at potentially trading down towards this previous support and resistance level here, which is a good below this area, which is a good 200 pips away from that mark. So patience is a virtue on this particular pair. Excuse me. So intraday, we do get a sell signal on the 4 hour, but as I mentioned to you, you're looking at the 4 hour here in particular. We're getting that sentiment move. Fantastic with a red arrow, red candles, and the moving average all below above price, which is fantastic. RMO has just dropped below the zero line, and the MACD is well extended to the downside, making lower lows, which is fantastic. So if you were to take a trade now, you're looking at potentially a target of roughly around 50 odd pips to the downside. So one to be looked at. But however, on the 1 hour, our MACD is still above the zero line, and the R squared is just not complementing that downside movement. And you can see quite clearly it's hesitating. So on the 1 hour, you can see there's a slight support area. There we go, near-term support. So you'd want to see price actually closing lower than this. So I'll put a trigger line here, put an alert for close below this area here, below the institution, below all the moving averages. It's fantastic. We only need the MACD to complement this downside move, and I feel if we get a nice hourly close below the support over here, then definitely look to the downside and in the and back towards this 23.6 mark here, which is still a good 40 pips away as your clear target for this particular pair. US dollar Japanese yen is the last pair on the 4 majors, and you can see on the daily price has failed to break a major monthly February retracement area in the shape of the 50% mark. Clear resistance over since, what are we looking at here? Early April in particular. Third attempt, we just come unstuck here just recently, and price has fallen back, but very indecisive near term. A lot of indecision in the candles. Looking at our indicator box at the bottom here, you want to see the RMO and the MAC and the moving average, institution moving average indicator on the bottom here complement each other, and you can quite clearly see that's not the case. Long-term sentiment is one of upside because price has very much been in a bull trend. Here we go. If I pull back, you can see since September of last year, the RMO, MACD, everything's just been moving higher. Moving averages all below price. It's been fantastic. However, as it's headed into these 23.6, these retracement areas here on a monthly, she's come unstuck, and the one that she's come unstuck at now is the 50% line. So we've got to be well aware of that. We have a blue arrow, blue candles. However, our sentiment intraday has one of negativity, and the R squared is complementing that negativity. So it seems as though we've come unstuck at this level. So for this to look positive long term, we need to get above this 99.78, which is the 50% Fib retracement. Failure to do so, then we should start looking to the downside, particularly back to price support and resistance levels, and that would be in the shape of this white line over here at the 96.68 mark. And where price is trading right now to this level, you're looking at 180 pips away to that level. So there's a lot of sentiment to the downside intraday, as long as we get everything in our favor to look for that near-term target to the downside. You can see on our 4-hour particularly, price has just gone sideways. Not a lot of movement to the downside. However, RMO and MACD is complementing that. On our 4-hour, the one thing that we don't have in our favor is the moving average, but we can use it as a near-term target. Okay, so we know that you're looking at 114, take away the spread, so there's still a good 100 pips in profit to that level as we speak. So intraday traders, be aware of that. You can see consolidation here. We'd like to get below all of this first to get a true break of the support, this near-term support, get a break of that, and then you can target to the downside, primarily back towards that most important area here, which is this 96.68. In between that, we have the institution. That is only from where support is now to this level. There's still 30 pips. So get below the institution. I feel that you'll be in more of a stronger downtrend without less risk in that involved. So as long as it trades above the institution, it's still positive consolidation. Okay, so if it gets below the institution, then look for one of negativity for the foreseeable future. Okay, guys, that's it for today. On the 4 majors, please, if you're using the template, back it up with sound money management and keep it as simple as possible. The beauty of the template in the bottom corner here is exactly that. You want them all working together as a team. If they aren't, then obviously you can start looking to rather bide your time, be patient, apply trend line alerts, etc. like that. But you got to manage the trade, and they're all going to be working as one. One last thing, I'll repeat it again. There's a lot of news out today. Well, Europe is away on a bank holiday, so we don't have the French, the Germans, and the Swiss with us today. So a lot of liquidity out there in Europe is not going to be available. However, we still have an ECB monthly bulletin meeting at 9 a.m., which is not too far from now. However, we have sterling, and that's where most of the news is coming from this morning, is the manufacturing production month-to-month figures, expecting a slight slowdown. But the most important one is at 12 noon this afternoon, which is our official bank rate interest rates announcements, followed by the asset purchasing facility news announcement, followed by the MPC rate statements. So there's a lot of news coming out at 12 noon, and then following quickly behind that, we have the unemployment claims figures for the US market. They're expecting a higher figure. So unemployment claims, they are higher than the prior, which is not a good figure, because we had some great figures last week on the first non-farm payroll, which were a lot positive. So this wouldn't do any favors to the US market. And if that is clearly the case, where we are expecting, or if the forecast is true, then we could definitely see the US market falling against most of its counterparts. So one to watch, one to be aware of. Please factor it into your trading. Okay, so many people disregard news announcements, they're not aware of it, and they wonder why they don't get the trades that they're looking for when the markets go wrong. So very, very important. Make a note of it. Other than that, have a fantastic trading day, and I'll see you guys tomorrow. Until then, you guys trade serenely.